In this video, we will talk about the rudiments on how you can double your money and why you need to actually do it. I may talk a lot about the stock market, but please remember, the stock market is not the only investment on how you can make your money grow. Pretty much on how you can also double your money. There's so many ways on how you can do it. But the heart of this video is to show you why and why you should actually put more, invest more at the prime of your years. That this is one of the greatest times for you to invest. This is one of the greatest times for you to double down and put as much as you can for your money to work hard for you. If you want to know more about that, you have to check this video. Hi everyone, this is Marvin Germo. If you're new to this channel, please subscribe and smash that bell so you get updated every time I create new content about the stock market. We've just reached the 55,000 mark. Thank you so much for all of you who have been supporting this channel, who have been sharing, who have been liking, who have been putting in your comments. Thank you so much. I appreciate you guys. Let's keep on pushing this. Let's make financial literacy. Let's make YouTube cool for learning and not just for entertainment. So enjoy the rest of the video. So for this video, I'm going to show you a couple of slides where we will drill down on why you need to actually start investing now to double your money. Because I don't know if you know this, it's a math game. It's a matter of numbers, and it's a matter of time. It's a matter of you spending as much time as you can to let your money work hard and grow for you. Because you have to remember, in the world of investing, there's a tipping point. You have to reach that tipping point before it starts to scale up, before you have money massively work hard for you. And please remember, this is never about get rich quick. If you've been following me for quite some time, I'm never a person that will tell you do this so you get your money double quickly. I'm a person that will tell you this is the right way to do it. It's not about get rich quick, it's about get rich right. Because here's the thing, when you do it right, it's wealth that lasts. When you do it right, it's wealth that it's not just for you, but it will be for the next generation and the next generation and the next generation. And I hope this video inspires you to actually do it. This video inspires you to double down, especially for you guys that are getting your 13-month pay and bonuses this year, this December, this November. Put in as much as you can right here, right now. Do not spend it yet. Hustle so hard so you get to develop those assets. So enjoy. So how do you double your money by investing? Please remember, the context of investing is you putting in a certain amount of money to buy assets, and that assets would give you the potential to make your money grow. Please remember, I mentioned the word potential because it also gives you a scenario where if it doesn't go your way, you also have a possibility where you could also lose money. So it always goes back to, you always put an amount of money that if it goes the opposite direction, you can still tolerate it and still sleep well at night. Never put anything in investing that you cannot tolerate as well. So for those who want to know a specific methodology on how you can check how your money can double and by what time, I want to talk about the rule of 72. The rule of 72 basically is this. You put your money on a certain investment that will give you a fixed rate of return, and the narrative there is this: how long will it take based on the rule of 72 given a fixed interest rate before your money to double? So that's just basically it. So meaning this, 72 divided by 5 being 5% interest, 72 divided by 5 gives you 14.4 years. Meaning, if I have a certain amount of money, I invest it into something that gives me 5% a year, it will take 14.4 years before that investment will start to grow or to double at least. Next, I'll try to take on more risk. Instead of something that gives me 5%, I'll try to look for something that gives me 7% annual return per year. So to double your money, 72 divided by 7% gives you 10.29 years. If you notice a trend, the more risk that you will be taking, and the higher the rate of return that you will be getting, it takes a shorter amount of time before you double your money. So that will be a prevailing theme. There's something that I want you to see here, that it's not a matter of if it will double or not. If you know how to invest it wisely and you do it properly, it's not get rich quick. 10 years is not a very, very short amount of time, but it will double. It will double. Now let me try 9%. If I do 9%, it now shortens already 8 years. So what does that mean? If you are 25 right now, you invest in something that gives you 9% per year, you will double your money in 8 years. So by 33, you've doubled your money. And but here's the thing. From by the time you hit 33 and you reinvest everything, by the time you hit 41, whatever the amount is at 33 will double that. By the time you hit 49 years old, and by the time you hit 57 years old, the the ability for it doubling and doubling and doubling then becomes bigger. So people always think that it's 1 to 2 and then to 3. No, it's not like that. Because if you don't take out the money, it will just be a stockpile of it building and building and building, and it starts to grow at a massive level. Another example before I proceed with what I want to talk about further is basically this. You have the rule of 72 divided by 11% gives you 6.55 years. Again, more risk, but let me increase this. 72 divided by 15% or 15 would gives you 4.8 years. So the higher you go into that spectrum, it takes a lesser amount of time for you to double it. Meaning also, here's what's interesting though. It's easier for you to get a lower rate of return and be consistent about it for a long period of time. But for example, you invest in the stock market and then you get a higher rate of return for like 2, 3 years or 4.8 years. What does it show you? It might be possible that you can possibly get it and you can double it at a much faster pace at a shorter amount of time as well. But please remember the rule of thumb. And I'll say this over and over and over. The more risk you take, the faster your money will double. The lesser risk you take, the lesser the time it would be for your money to double as well. But in the same regard, please remember this. This is very, 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 very important for you to know. It's harder to double a large amount of money, it's harder to be consistent for larger rates of return on a very, very prolonged period, to be consistent with it, as compared to you doing it for a small percentage of money over a stretched period of time. Meaning, I said this a while ago, earning 50% a year is possible, but I'm not sure if you can do it for 40 years straight. But as compared to getting 4% for 40 years straight, that's probably possible. But at the end of the day, also, getting 50% for 2, 3 straight years is possible. And then, it's easier for you to double your money in that go. But please remember the rule of thumb. It will always double as long as you stick to the plan of compounding, fixed amount of time, fixed interest, not taking the money out, and just letting it grow and putting the interest in. It might be hard to grasp because as humans, we always think linear. When I say linear, we think that 5 plus 5 plus 5 plus 5 plus 5 equals 30. It's easier to conceive. It's easier to see. It's easier to grasp. But what if I told you, what is the answer of 5 times 5 times 5 times 5 times 5 times 5? It will take a longer time for you to answer it or to get the specific answer. Comment below if you know it in one go. What is 5 times 5 times 5 times 5 times 5 times 5? If you have a specific answer, I want you to put the comment below mentally without using a calculator. Do not cheat. Please do not cheat. Please do not cheat. But anyway, arriving through to 30 linearly, 5 plus 5 plus 5 plus 5 plus 5 plus 5 is easy. It's easy to understand. But what people don't see, the power of compounding is exponential. The power of compounding is not you just doing it linearly, but the process is the same. Instead of doing 5 plus 5 plus 5 plus 5 plus 5 plus 5, you are doing 5 times 5 times 5 times 5 times 5 times 5. This equals 15,625. The results are massively different, but the methodology of you doing it is totally the same. It's just being consistent of what you're doing. So basically, that's what I wanted you to get. Next is this. What does compounding interest basically mean? To us as investors, it basically means this. You putting in the amount of money, regardless of whatever investment you're thinking of, and then as you put that money in, when you make money, you don't take it out. I repeat, you don't take it out. But I'll put it a step further. The money that you earn, you also reinvest it back. The biggest mistake of people is this: when they make money, they take out the capital. That's wrong. I repeat this: do not take your capital out, because it removes the ability for your money to grow. That's why I keep hammering this, that you put money that you never leave Other, you put money that you are okay, that if it goes down, you won't panic. You only put money that's an excess so that later on you would not need to remove it out of that investment. So that's what I want to hammer into you. As an investor, for compounding interest to work and for it to grow for us massively, number one, you put in money, but it's not just that you put in money. When it starts to earn, do not take out the capital. Then, as you start doing that, also as it starts to earn, the earnings, do not touch the earnings. Just reinvest it back in. I know this is hard to grasp because people who like get rich quick. People like when they double their money to buy something. People want when they double their money to use it into something else. Go to the trip, buy this, buy that. But if you believe that you are the season of your life that you need to make money, you need to grow your assets, you need to just make it exponential right now. Do not remove your capital. Do not and reinvest your earnings. That does not require being a genius. That just requires you buying a certain, let me relate to the stock market, that just requires you buying a stock, getting the dividends and reinvesting the dividends over and 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 over, and not to be tempted to take out the money to buy stuff that you don't need if you believe you're at the point in your life where you need to accumulate more money. Now, but you know what's going to make it more amazing? What's going to make it stronger? Is this. You put in more money each time you have extra and you start to compound that too. So the first scenario I told you was put in money once, do not take it out, reinvest the earnings. But the strongest weapon of it all is put in money, do not take it out, reinvest the earnings. Then when you have extra, keep on putting more, keep on putting more, keep on putting more, keep on putting more, keep on putting more. Are you guys learning so far? If you guys are learning, I hope you are, because I'm going to give you more examples further. We've only just begun. Comment, I'm learning. If you are learning, comment, I want more if you want more. Just a quick plug, by the way. This is happening this Saturday, Stock Smarts Manila. For those who want to trade using technical and fundamental analysis, we will have this November 23, 24, December 7. And fundamental analysis, December 8, December 7, 8, and 14. Comment Stock Smarts Manila if you want to join us, if you want me to send the link on how you can enroll. This is basically me teaching you how you can trade and time the markets using technical analysis. This is me also teaching you how you can select good stocks and avoid the ones that are bad. How do you differentiate which are the stocks for trading? How do you differentiate which are the stocks for investing as well? Now, let me give you an example of how compounding massively works. Let's go to the US markets, the S&P 500. The S&P 500 is a benchmark similar to the PSEI. The PSEI is 30 stocks, and the PSE, the S&P 500 are the 500 largest stocks in the world. Here's the thing. Can you comment, since World War II, how big, it's around 74 years, how big is the compounding interest of the S&P 500? Comment below. I'll give you 2 seconds, 2 or 3 seconds before, so you can put in your answers. 1, 2, 3. Answers in. The one that gets the best answer, I don't know. I don't have a reward, but I hope. But bragging rights to everyone who's joining. Anyways, the compounding the compounding interest since World War II, 74 years in the making. It's not 5%, it's not 7%, it's not 10%, but it's 11.2%, 74 years since the end of World War II. Now, here's what's interesting. That may seem to be a small amount of percentage, but here's the thing. The total returns of that in 74 years is 270%, 270,000%, not 270%, but 270,000% in total returns in 74 years. It's big. Why? Because compounding works. Compounding, people don't like compounding because they like get rich quick. People always cite that sayang yung pera sa inflation, but guess what? It's okay to lose out on inflation in year 1, 2, 3 if you make up for it in year 5, 7, 8, 9, 10. That what you earn on year 10 will compensate for the 9 years of you waiting. People don't like to wait. People always like to, their stocks are down for one day, they're panicking already. Please remember, whoever has patience, whoever follows their plan, whoever sticks to the way they go, you will always have the chance to win and trade the markets with confidence, because it's always about being long and not looking at it on a get-rich-quick scenario. Anyways, what people don't know, I'm sure everyone knows about Warren Buffett. People talk about Warren Buffett as the greatest investor of all time. People talk about Warren Buffett as a person who has over 80 plus billion US dollars in net worth. But what people don't know and what people don't understand is this. Warren Buffett made his wealth massively when he was already in his 50s. He was already rich before he was 50. He was already a billionaire before he was 50. But the massiveness of his wealth came in past the 1990s already. Why? 90% of Warren Buffett's wealth he just made later on in his life. Let me show this to you. Let me show you how compounding is on a massive, 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 massive scale. In 1990, Warren Buffett was around 3.3 billion US dollars. Fast forward to 2019, he's around 84.7 billion US dollars already. But look at this, from the time he was born to the 1990s, he only got 3.3 billion US dollars. But after that, it started to scale. That's why at 36 years old, I'm excited. Why? Because the older you are, the larger your ability for your money to grow because you have time under your belt. So I'm just telling you guys, if you're investing and you're just on your first year, your second year, your third year, don't rush it. Don't be disappointed. The greatest investors know how to follow their plan. The greatest investors know how to stick to their game plan and be disciplined enough. Warren Buffett doubled his money by 4.5 times in less than 30 years. What took him 5-6 decades, what took him five plus decades to just hit 3 billion. Now he scaled it up and hit 80 plus billion in less than 3 decades alone. So just to end, here's the skills that you need for you to double your money. And this is something that everyone has, everyone can do, but everyone does not want to focus on because it's boring. It's not the get rich quick thing, and this is something that people don't normally talk about. But the skills that you need, even if you pattern it from Warren Buffett: patience. Time is your greatest asset. Your ability not to panic when everyone else is panicking will help you win. Your ability to look at where you will be 5, 10, 15, 20 years from now will allow you to make good moves today instead of trying to make shortcuts today. Discipline. Now, to follow your plan. If you say you're gonna put in this amount at this valuations for this stock at this price, you do it. Even if everyone's scared. The discipline that if the fundamentals of the company is good, you start to buy it even if everyone tells you not to do it. The discipline to buy at support when everyone else tells you that there's bad news, but you are following your technicals and you are buying at the support. It takes discipline to do that, and I keep saying this over and over and over again. If you follow your discipline based on the right principles, and you do what everyone else is not doing, you will achieve and you will receive and you will get wealth that everyone else does not have as well. And number 3, it's the ability to add more. It's not just about you putting in money, and it's not just about you not taking away that money, and it's not just about you also reinvesting whatever you earn, but it's the ability that every time you have extra, you put it, you stockpile it, and you make that money grow hard for you as well. I hope you guys learned a lot. If you do, it will mean so much to me. If you haven't subscribed yet, if you can subscribe. And YouTube has this thing that if you guys like, share, and comment, it will help reach more people as well. And if you find so much value in what I do, and if you find value in me creating videos on a daily basis, I would appreciate it if you can like, share, and leave a comment, and then send this to people who you believe need this as well. So I hope you guys enjoyed the video. I hope this was something that helped you. This is something that added so much value to you. That's why I've been making more than one video a day, because I've seen it, that it's creating a large impact, not just to Filipinos anymore, but to a lot of people around the world that love to learn more about finance and investing. And I'll never stop doing this. I'll keep on doing this because you know what? This is the game. It's time for us to realize that financial freedom, prosperity, it's not dependent on what the government is, on who the government is, but financial freedom is dependent on what we do with the resources around us, what you do with the time that you have. I pray that you use your time wisely, because time is the best and greatest resource out there. Spend the greatest time to learn, to build your skills, and not just that, execute. Put that money where it works hard for you. It doesn't have to be the stock market, but it has to be something that's planted, because when it's planted, it gives you the potential to make it grow, to make it get bigger. Do not spend on stuff you do not need. If you don't have any assets yet, do not spend on stuff that you do not need. If you don't have any savings yet, if you're massively in debt, get out of debt first, then massively invest. This is Marvin Germo urging you that you can do it, pulling for you, rooting you, that you can actually make money, that you can make your money grow, that it's time for you to be financially free. Make your 2020 much, much, much better than what your 2019 is. If your 2019 is better already or it's good, may 2019 be your worst year yet. That the greater days are ahead of you, that the greatest days of your life, of your lives, whoever I'm talking to, is yet to come. So that's it for now. This is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.